What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 7th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a wide range of topics to discuss, from taking a look at cryptocurrency price action and fundamental news, as well as taking a look at the continued developments around the coronavirus and its effect on the global economy. So we've got a lot of things to discuss, but real quick to let you all know, this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to interact with other traders across the globe. And they just recently launched their copy trader feature for cryptocurrency trades on the eToro platform for US users. So you can copy a variety of other traders, including myself. In real time, you can not only view their stats here on their performance, their current portfolio holdings, and also a chart of their previous performance, but you can also simply click the blue copy trader button, and just like that, you'll trade alongside them real time at the exact same prices. So if that interests you, definitely check out the link down below in the description for more information. Now, taking a look across the board in the market though, guys, with Bitcoin up a little less than a percentage here, most cryptocurrencies are in a no-trend scenario between 1 or 2% to the upside or downside. However, we will see that a mass majority of plays here that are actually making serious moves are on the upside. We've only got a few players here that are entering into double-digit territory to the downside. Right now, we've got Kick Token up 37%, Hypercash up 17%, and a lot of our plays like Chainlink and Ravencoin doing well, pushing close upwards towards the 10% mark. We got Chainlink up 9%, Ravencoin pushing up 8%. Again, showcasing a lot of momentum here over the past week. And I think that we're going to continue to see this because we're getting towards some very interesting levels for altcoins. Bitcoin dominance is starting to, again, set new lows here relatively over the last couple of months. So it's really exciting to see this kind of trend shift here in the market where risk taking is coming in, even though Bitcoin is remaining really strong now and getting very close to pressing up towards 10,000. Again, much like it was before, the past two times we passed 10,000, it is going to be a definite psychological barrier. We'll see if we can break through it. And if we do, we're going to get definitely a sense of a FOMO rally. We tend to see that where a lot of people start buying in because a lot of people think that, at 10K, it's just going to hold down. And it does do that sometimes, right? It's definitely not an easy level to break through those big, even levels, especially when you're entering into adding a new digit in the sense of price action, right? If you're going from the thousands to now tens of thousands. So anyways, speaking of that, another thing that's really important to talk about is what are we looking for in the sense of price action in order to really justify or be confident that we're going to start seeing parabolic rallies, right? I really see a continuation here up towards 20,000. Well, if we take a look at the logarithmic chart here, we can see a very clear picture. I'm just going to go ahead and adjust my trend line there. So we can see here on the line here, we've had, if we take a look at the logarithmic chart, bear in mind, we see a very consistent line of support here from a lot of the previous lows as far back as 2015, all the way here through 2019, and also stepping into 2020. And now we have to take a look at the line of resistance here, right? We obviously have the support here holding up Bitcoin's chart, but along with that as well, we've got to see what part where we can really smash through for resistance in order to really start kicking off this next rally, right? We've had some great price action so far, but when does the momentum really set in? Well, if we just simply take a look at the last two highs here, this leads us towards a range here sometime in March where we can really break up above 12,000. And if we do get above there, I think you're going to start to see a momentous rally. I think getting past that resistance from the two past significant highs, again, it kind of causes a coiling action. This is what wedges commonly do. And especially on something that's a cyclical asset that's usually bullish in this case during these time periods, it's going to give Bitcoin a lot of leg room to definitely start to pick up here, even on the logarithmic chart. And hopefully over the next couple of months, into the later part of the later half, I'd say at a bare minimum, I think it's going to be in the last quarter of 2020. We really start to test over 20,000 in this case and start to kick off for 2021 from going to 20,000 to a much higher level and really, again, start to see the next cycle continue after breaking past the previous highs, right? And if we take a look here, we're taking a look at Coinbase, so we're not going to have all the price history. I want to take a look at BLX. We can see here, guys, once we get above the highs here and revisit back above, this is when a lot of the momentum kicks in. This is when we had the 20x here in Bitcoin's valuation. It may not look as drastically more significant than this, but it's because we're on the logarithmic chart, right? Back here, we went from around 200 to 1,000, so that's a 5x. But afterwards, the real solid moves here come in after we get above there, get above the previous highs. Now, I don't believe we're going to do a 20x this time around. What we're really going to do from here is have from this low range around 7,000, right? Give or take, if you're taking 6,500 to 7,000, right? I would say that basically that's roughly speaking around a 3x in this case, right? And then after that, we're getting a 5x most likely if we go up to 100K, or if we go up to 200K in this case, right, we're getting a 10x. So it'd be, again, still half of what you saw here on the actual next cycle when we got back above the previous highs of the last cycle. So hopefully that makes sense, right? Up from this point on, we had 20x. Basically, from this point on, upward to the new high. If we went to 100K, it'd be a 5x. 200K would be a 10x. Basically half of the kind of gains we got back here, which I think either are reasonable. It really depends on what kind of momentum we have and what's going on in the global economy and what kind of awareness Bitcoin is seeing during that time phase. Who knows? I don't want to overshoot, and I also don't want to underestimate. I think that that's a general, as crazy as that sounds, leaving a 100K spread, I think is actually very reasonable because Bitcoin are very parabolic markets. I remember in the last cycle, on this topic, many people, including myself, saw when we reached 10,000, as we just talked about, with 10K being a kind of, psychological barrier, right, for Bitcoin just a couple of days ago. 10,000 was the kind of target range for me, and I was like, it looks like this is probably going to be it for the cycle. And luckily, I just raised my stops in many cases. I took a profit on a few positions, but luckily, I just raised my stops on most of them because in this case, it continued higher and doubled within a matter of a few days and went to 20K. So, I mean, that's the kind of the stuff that's crazy about crypto markets, and it's a good kind of crazy, right? We want that volatility, we want the excitement around this market, and we want price potential, right? That's what every trader and investor looks for. And also as well, just again, to look through the charts here, I want to go ahead here, take a look at Chainlink. Big pop up today here on Link. I love the volume I'm seeing here on Binance, some of the biggest volume since back here in early January. So I like seeing this continuation through. Strong start to the month. And again, in Ravencoin as well. Again, getting another little momentum-based rally here, right? It's still setting these higher lows here. I think buyers are starting to realize that over time. We're still setting higher lows every single time we pull back, which is, again, a very important and significant thing. But I want to start seeing higher highs before I really start building a serious position in this, all right? So that's it for the kind of crypto positions we'll take a look at today. I want to go ahead here, take a look at some of the news and developments here. So crypto mom, Hester Pierce, who I was fortunate enough to meet last year at Consensus. I'm hoping to see her again this year at Consensus. She's really sweet. And just really what I like about her, guys, I know usually anyone from the SEC usually gets a bad eye from the crypto space. She is not only excessively pro-crypto and innovation and the finance space. I think she's one of the people who are really going to spearhead the United States being, hopefully, I hope, a leader in the sense of these new developing markets. But along with that, she's just a genuine human being who really wants to hear people out and has more of a liberty and kind of freedom-based position. I actually had to challenge her on why I believe there are room for some regulations in cryptocurrencies. But Hester Pierce, in short summary, she's a really nice person. And she came out with a very interesting proposal. And this has to do with the idea that the SEC could provide people who raise in token sales, whether it be probably ICOs or IEOs, to give them a matter of 2 to 3 years in this case to have a safe haven before regulators actually crack down on the project. Now, what do I mean by this in this case? Well, what is she basically demonstrating by this kind of 3-year safe harbor? So what she's saying is that, the SEC's issue over the last few years has been that a lot of these projects are not decentralized projects, and in many cases, they're just raising a security of some sort, right? They're basically trying to raise for something that probably isn't decentralized, that isn't reaching for some kind of overarching open source community, right? There's a lot of different kind of labels you could toss at it, but because these projects can't reach it right away, because they're either still working out their models for the projects that they're building, or maybe in the beginning, you need centralized elements until you can actually build a decentralized system. And this is kind of the case that I brought about for Ethereum with, for example, like the reversal, for example, when Ethereum rolled back the chain, for example. Ethereum was in its early days. If it lost 20% of its Ethereum to some kind of hack and wasn't able to recover it, Ethereum probably would be nowhere where it is today if they weren't able to roll it back, right? So it's this kind of argument that it's like, and again, I don't want to debate rolling back the chain, but I think what Hester Pierce's point is in all of this is that these are software projects. These are new emerging concepts, and they can become very valuable over the next few years if we give them the room to foster and make mistakes and test and trial and run through a set of different proposals and ideas, and giving them the time to truly decentralize, right? And I think that this is a very fascinating concept. Again, it doesn't just leave way for anything to happen in the cryptocurrency space. And the SEC, what I love more than anything as an organization, or I guess as a branch inside the government to regulate securities, is they've actually done a great job of kicking out stupid projects that have just either raised ridiculous amounts of money and have delivered nothing, or projects who are outright just simply scams in this case, or Ponzi schemes. And you can tell, through the Howey test website they made and stuff, or I think it was Howey IC or whatever, they've demonstrated what their target is. They're trying to take out the outright scams, and they've given a lot of room, and if anything, a lack of penalties for projects who did violate securities law to some degree, right? So again, anyways, long story short here, I'd recommend, again, reading through the article here. It's not that long. It talks a little bit about this concept of the safe harbor here. Again, laying back some of the requirements in this case, making it simpler for projects to simply try innovating and leading forward in this space. And I think it's really going to be a good thing for the United States because it attracts capital, a lot of foreign capital to the United States that has been stuck in a lot of other token projects globally outside the US, where it's not hiring US developers, it's not hiring US employees, it's not bringing GDP to the United States. So I hope we're a hub for this, and I got to praise Hester Peirce for this. I think it's really nice to see that she has continued to pursue developments in the cryptocurrency space. So hats off to her, and I do hope to see her at Consensus this year. Now, going on here to talk about a little bit of the sense of price action here, CoinDesk got to say they actually had a good amount of articles here today that I wanted to talk about. So they made an article headline that Bitcoin had recovered over 45% of the correction in just a matter of 7 weeks. And I think this is a very significant point to bring up here, guys. And it's why, again, during those periods of time where there is peak fear, like just a couple of weeks ago, yesterday actually we talked about the fear to greed index and how just a couple of weeks ago, I mean, you think about the state of the market now, how people are actually getting really excited, they're getting exuberant. And really just a couple of weeks ago, we were in absolutely fierce territory for the most part. I can tell you guys, I definitely, when it comes to corrections, I definitely feel a sense of unease sometimes because there is always a chance that there could be a black swan event. Cryptocurrency markets may not pan out. We always have to keep that in mind. But for me personally, I was confident. I knew that the fundamentals hadn't changed, and I know to buy when there's fear. So I was averaging into markets. And in a lot of those positions, I'm up now. So the major point I want to talk about is, in this case, just a matter of 7 weeks, corrections in very short periods of time can be recovered very quickly in crypto markets. It's a very important thing to take into mind. If you take a look at the chart here for Bitcoin, right? Take a look over BLX. You'll see a lot of periods of time where even though you have these very lengthy corrections, markets recover very quickly because the FOMO starts to set in. A lot of the people who are waiting for lower levels who sold buy back in, and they end up buying back in higher. And this is why I always tell people, again, if you're not turning out profitable on trading, guys, you got to make sure to ignore that voice in your head that's saying, I want to trade, I want to trade, I want to trade. The best thing you can do here, right? I understand trading, I'll be honest, guys, doing it for nearly, God, it's almost been 8 years since I've really started trading. It's crazy to think. The major point I'd say is that if you love trading, if you kind of sense like in a way that you love that kind of gambling side, taking the risk, watching the market on the shorter term time frames, make it a smaller allocation of your portfolio, guys. I mean, I'm not saying that as financial advice. I'm saying it because historically speaking, under the numbers, under the facts, and the research that has been done across a variety of studies in traditional markets, people lose out trading. Plain and simple. Right? It's why I like features like the Copy Trader and eToro. It's why I like things that give you a portfolio or a diversified exposure. And again, allow you to play a safer bet here on markets like cryptocurrencies, because it would suck to be losing money in a market that's going up multiples on its valuation, right? And even if you're making money, again, it's a matter of whether or not you're outpacing what you would have just done simply holding, and the stress that comes with it is probably the worst part. So again, that's something I just wanted to stress, ironically enough. That's some point I wanted to stress here on this kind of topic of trading. But again, very important thing to take into mind. Of course, you can take a look through the TA here. They take a look at a lot of the indicators we look at. They have the RSI instead of the stochastic RSI, and they take a look at the MACD. But again, definitely take a look through their charts if you guys want to. And the last thing I want to talk about is RSK here. Now, RSK is a really interesting company. They basically have been focusing on smart contract development or creating a smart contract layer for Bitcoin. And now they've got a very interesting proposal where they're actually going to be able to build an interoperability bridge between Bitcoin and Ethereum. So to put this simple, for example, if in the DeFi space, I wanted to create a platform that allows me to create maybe DAI-based loans, in this case, or stablecoin loans that are backed by crypto collateral, I wouldn't just have to use Ethereum in this case. I can maybe even make an interoperable play with RSK and use Bitcoin as collateral. I could tokenize Bitcoin on the Ethereum chain, ownership in this case, and do a bridge between chains and make it where, again, I'm not duplicating Bitcoin. I'm just basically transmitting that value. I'm locking up the Bitcoin in a smart contract on the RSK chain and being able to actually utilize it as collateral in a censorship resistant way on Ethereum. And that is what really excites me, because quite frankly, I like Bitcoin's monetary policy more than anyone. And I think what's going to be very interesting over the next few years, guys, I know many of us believe that we're going to see cryptocurrencies being used as currency right away. And quite frankly, I've actually kind of come to the conclusion, outside of a few economies, it's not going to be like that. Many people want dollar exposure. So what we're going to see is just like it was back in the 60s and beforehand in the United States, where there was the gold standard, where I could come, for example, and basically know that my dollar was good for a certain amount of gold basically in a bank vault in this case, right? Basically, a $20 bill would give me an ounce back in the day. In this case, what is going to happen is, instead of precious metals serving as the reserve kind of store of value behind the paper currency, in order to generate loans, in this case on cryptocurrency networks that are censorship resistant, Bitcoin is going to be the collateral. ETH is going to be the collateral. Litecoin will be the collateral. These digital currencies are going to be the new age of digital commodities and store value. Until they become stable enough, then, and only in that moment when they're stable enough, they'll finally be used possibly as money as well. But I think for now, and that's also as well in combination with a mass devaluation of the dollar. But until then, I think this is the perfect bridge here, where it's going to provide a lot of value and demand for cryptocurrencies, and it's also going to allow us to start using cryptographic networks to make payments. So again, very big picture view. I'd like to hear what you guys think about it. You might agree or disagree, but this is just one example. I kind of got sidetracked. This very interesting interoperability bridge that RSK is building. Now, RSK has been kind of silent in the background. I think that in 2020 and 2021, we're going to see them full force, and we're really going to see what RSK has been working on over the last few years. And if they can really make this happen, this is going to be huge. So just to kind of get an idea here, I think this paragraph really summarizes what they're doing. So when a user transfers tokens, the bridge's smart contract locks the originals and mints it in a corresponding amount of new tokens on the other chain. So again, locking the Bitcoin on a contract on RSK, right? So it can't be moved in this case. And using the system, Ether-based tokens, so we generated the tokens on Ethereum. This is, again, that idea I used for using basically a Bitcoin-backed loan on the Ethereum chain. Ether-based tokens can be transformed into RSK's RRC20 tokens, which conversely can be turned into Ethereum ERC777 tokens. So again, it works both ways. So it's a very fascinating system, and I'm really excited to see the continued development of RSK over the next couple of months. But speaking about the continued fundamental development in the cryptocurrency space, a really nice chart that I just saw today is the total amount of capital locked up in the DeFi space. We have reached the $1 billion mark here for the DeFi space, and it's incredible to see this kind of rate of growth that we've had just back here. And around October, we were sitting at $500 million, and now we're up towards $1 billion. Now, bear in mind, some of this does come with the price rise of Ethereum. In fact, we actually topped out back here about a week or two ago in mid-January for the total amount of ETH locked in DeFi. But the trend is very clear, guys. We're seeing a continued growth here. And it's amazing to see that even we've reached at this simple $1 billion mark. And I believe we'll see $2 billion soon enough. We're going to start to see a much more exponential rise here as the value add in DeFi continues to grow. There's more projects, there's more fundamental developments. It's getting better and easy to use on the user experience. And I think that all of this, especially the lending markets, are going to be huge. So I'll have more to talk about it in the future, guys. But again, very important thing to note, over almost 3% now is locked in the DeFi space. 3 million ETH here. Very, very fascinating stuff. Now, in the sense of price here, I wanted to visit the rainbow chart here. Last thing we'll take a look at in crypto markets for a little bit of data science. Again, the rainbow logarithmic chart here factors in, again, these different major levels here, the deviations here. And we can see here that we're now exiting out of the second blue band here, or I guess kind of the, you can't say this is almost like purple, but you can see here we're entering out of the blue band here into a lighter teal band, and then entering into the higher levels here. Exactly where we should be on course for this next cycle. So really good to see here. Just wanted to revisit that. And let's go ahead and talk a little bit about equities. Now, global equities down a little bit here over the last 24 hours, more specifically over in Asian markets like Singapore and Korea and Taiwan and China, as well as Hong Kong. We're seeing this getting hit more than anything because of the continued spread of the coronavirus. And the only thing that's up is the VIX right now. But U.S. stocks, not down too much, back down about 1/4 percentage point. And if we take a look here at the total numbers of cases, I mean, we certainly have grown, guys. I mean, from when we last talked, we were nowhere near 31,000 here. So we're continuing to expand here. I think we really talked about it significantly back here in the second or third. Now here, we're up towards well over beyond 30,000. So, again, talking about the numbers here, again, not trying to fret over it or get too emotional or, try to, again, we want to think ahead, think about how bad this could get, but also at the same time, we don't want to make this seem like a pandemic. We don't want to get flustered by the big red dots. At the end of the day, guys, it's very tragic. 638 people have died from this. That's the one thing that concerns me is even though this ratio has declined, which makes me feel much better, the more we have recovered versus the total dead, makes me much, much more happier. And it looks like we're entering more into a 3-to-1 ratio here in this case, right? That all being realized, again, the major thing that I would say is that we don't have the kind of exponential growth we were really predicting originally, which is a good thing, right? We're not seeing this double on a daily basis. So it seems like some of the containment protocols that China has integrated, as well as other world economies through airports, through, again, quarantining anyone in this case who has been deemed to have the virus in any way, right? Helping them, providing medical treatment. It seems like world governments have taken a pretty good stance here to at least suppress any kind of exponential growth. But would I be personally trying to travel throughout this time of the year? No, especially not through any major connecting flights or any regions like this where it's prone to be spreading. And then I'm also still concerned about the incubation period. This probably means, the incubation period can spread from anywhere, depending on the strain, anywhere from 12 to 14, from 2 to 14 days. So give or take somewhere in the middle there. The number is much higher here, considering that the incubation period is probably suppressing a lot of people from realizing they have it. And also, we know that China is fudging some of the numbers. So I would say this is much more around 50,000, give or take, 50, 60,000 at a bare minimum. So just taking that into mind, again, we'll start to see the number reflect that over the next few days because a lot of people have their incubation period where they still don't know they have the coronavirus inside them. So hoping that number is nowhere near the predictions I have here, around 50 to 60,000 over the next coming few days. But we'll have to see. More than anything, I hope this number stays relatively the same and doesn't grow. It's a very tragic thing. But again, guys, if you think about it at scale, there's a lot of things people die from every year and stuff in much larger numbers. And I know people usually mention the flu, but the issue here is that if this isn't contained properly, it will kill a lot more people than the flu. With a 3% death rate, that's something pretty severe. And the spread, the ability to spread virally is very important to take into note. Now, there are some things to take into mind here. The death of one of the whistleblowers, who was a doctor who had warned people ahead of time. He basically been sending WeChat messages that eventually spread out globally on the web. One of these doctors has now died from the coronavirus, even though he tried to warn people ahead of time of it. And this has led a lot of people throughout China having outrage against the Chinese government, right? During this period of time, there's been a little bit of an uprising here, over the web, and people have started to speak up against it. And again, this is what I always talk about. The Chinese government tried to suppress what he was saying. Again, anytime people speak out about this stuff, and it angers the government, they tend to make punishments in some form of sense because you're either talking bad about the government or you're basically showcasing that the government is responding properly. The thing that makes you realize we're lucky to be here in the United States or in a variety of other countries around the world where, you do have some element of free speech, right? But again, it's very, very sad case scenario. And again, it's gotten more and more people in China flustered. So I think it's just going to cause more problems with the fact that they've been trying to suppress just how bad it is. However, NASDAQ, U.S. equities look like they're going to continue charging forward. NASDAQ 10,000 by the next 2 months at a minimum. Right? Or sorry, I would say at a maximum in this case. Just the sheer momentum here looks like we're on course for a final peak in the NASDAQ around 10,000. So a few hundred points to go, and we'll be there soon. One thing as well on the corona case is that Chinese scientists are supposedly saying a pangolin, or like an anteater, is possibly the host of the coronavirus. So there was a recent study done they actually found a correlation here, and we'll go ahead and highlight the major point here, a 99% identical genome sequence of the novel coronavirus strain in these specific anteaters that they have found in humans. Now, there's some criticism here that supposedly, because we need to, so I'll just go ahead and read it here just to make sure I don't say it sounds stupid. You can only draw more definitive conclusions if you compare prevalence, so basically how frequent in this case you find it in these species as you would in humans. So this is the one criticism of the study, but I think it's a very interesting correlation here. I mean, we've been bouncing around so many different cases of where this came from. People have talked about it originating from bats, as it did with SARS in the past. In this case, anteaters from like fish markets. There's a lot of different possible reasons why this might be happening or where it might have stemmed from. But I can tell you guys, it's likely from some kind of form of an exotic animal in this case, rather than, I would say, a strain of fish at a fish market. It's usually in these kind of things that people aren't commonly eating, right? So I think that's where it stems from. It makes the most sense on a logical basis. But again, maybe I'm missing out on it. So anyways, that's it for the video, guys. I'd like to hear what you all think about it. If you like the video, drop a like. Leave a comment as well on what you have to say in the sense of the things we talked about, in the sense of the coronavirus, cryptocurrency market, some of the fundamental developments in the crypto and tech space. I'd love to hear your guys' thoughts on all of those. But until the next video, I'll see you all in the next one. Stay tuned.